Hello everyone, welcome you all once again in the case study discussion. Before I start this discussion for the case study number 7, I just want to give you a small message that at this point of time you need to push yourself because no one is going to do this for you all. Only you are the person at this point of time who can motivate yourself and create a self-belief in yourself. And if you can have a self-faith and self-belief in yourself, this exam is going to be very easy for you all. Now let us start the discussion for the case study number 7. Can we start? Yes sir. What is given? Beauty Limited is a diversified group having multiple business interests in many countries. The group publishes its financial statement following international financial reporting standard. Wherever IFRS is given, just read it as Ind AS, because this question I have taken from old scheme GFRS paper in which IFRS was applicable, but now we all know that IFRS and Ind AS are same, so you can read IFRS as Ind AS only. During closure of books for the year ended 31st March 2023, certain transactions were highlighted by the group finance team. The finance controller need your assistance on the treatment of the following transaction. What they have given? Beauty Limited has commenced construction of a factory building on 1st April 2001. It borrowed 9 million for the construction purpose at 11% annual rate of interest. The construction of building was completed on 31st October 2022 and was ready for use on that date. So of course, can I say we need to capitalize borrowing costs up to the date when the asset is ready for use. However, the factory production commenced from 15 December 2022, so it was actually put to use on 15 December, which is not relevant. It means, can I say, you need to capitalize borrowing costs for how many months? From 1st April to 31st October, means 7 months. So what will be the amount of borrowing cost to be capitalized? Let us calculate. It will be 9 million multiplied by 11% into 7 by 12. Yes sir, into 7 by 12, correct? So how much it is coming? 9 into 11% into 7 divided by 12, it is coming 0.5775 million. This is the answer if they ask about borrowing cost to be capitalized. Let us move to the second point. Beauty Limited has granted 500 share option to its 100 employee at a price of rupees 12 each. So this is exercise price. The market value is 22. Market value of shares is not at all relevant, correct? Yes sir. The fair value of option on grant date is 13 rupees. So this is relevant. Yes sir. The option are to vest after 3 years from grant date. The fair value of option are estimated at 14, 15, 17 respectively for the next 3 years. Can you say for equity settled SBP, we never do reassessment of SBP reserve account, we will not do reassessment of equity account. Got this point? Therefore, this information are also not relevant. So, what will be the EB expense for the first year? But it will be 500 into 100 employee into fair value option into 1 by 3 because it is 3 year. So, this will come how much? 500 into 100 into 13 divided by 3. It is coming how much? 2,16,667. 2,16,667. This will be the answer, correct? Let's see what they have asked. Beauty Limited has acquired a property on lease by paying a premium of 11 lakh for a lease term of 5 years. Payment of premium means it was paid on the date of contract. So 11 lakh is already paid. Fair value of the asset is 19 lakh 50,000. So fair value of asset is 19 lakh 50,000, which is not at all relevant for the accounting treatment in the books of lessee, correct? As per terms, the annual lease rent is 2 lakh per annum for the next 5 years. So annual lease payment has been given 2 lakh per annum for the next 5 years. That is given annual lease payment. The present value of annual lease payment is given 7,60,000. The present value is already given 7,60,000. The company have taken this property for further let out, will recognize the same as investment property under Ind AS 40. So can you say this will be ROE asset in the books of Beauty Limited, which will be classified as investment property as per Ind AS 40. Now, Ind AS 40 says that whenever ROU asset has been classified as investment property, the recognition and measurement will be done as per Ind AS 116. Now, as per Ind AS 116, ROU asset will be initially measured at present value of lease payment, means initial value of lease liability plus whatever you have paid on or before the commencement date. It means, can I say present value 7,60,000, how much you have already paid on commencement date, that is 11 lakh. The total become 18,60,000. 18,60,000 will be the measurement of ROU asset. Correct now. Lease liability will be how much? 7,60,000. Let's see what they have asked. Correct? Yes, sir. Further, Beauty Limited has given on monthly lease office at Pune to Akil Limited for a period of 10 years on a monthly rent of 30,000. Rent will be increased after every 4 years by 10% over the previous rent paid. Means after every 4 years, rent will be increased by 10%. The lease rate does not amount to finance lease, so of course it will be classified as operating lease. It means what they are saying for year 1, year 2, year 3, year 4. What is the rent per annum? 30,000. Correct. For year 5, year 6, year 7, year 8, it will be 10% add karenge, so it will become 33,000. Then for year 9 and year 10, it will be 33,000 into 1.10, that is equal to 36,300. So for the last 2 years, it will be 36,300. Let's see what they have asked. Based on that, we'll do the calculation. Beauty Limited granted 400 stock appreciation right each to 75 employees on 1st April 2021 with the fair value of 400 each. So on the grant date, what is the fair value? 400. The SAR will be settled in cash. The terms of award require the employee to provide services for 4 years in order to earn the award. The fair value of each SAR at each reporting date is 420, 440, 430 and 436. And we all know that for SAR, we do reassessment of liability at the end of each year. Let's see what the question they have asked, but reassessment will be done. In case of equity settle, no reassessment. In case of cash settle, we'll do reassessment of the fair value option at the end of each reporting period. Correct? Now let us see. Beauty Limited, the companies are recognized lease rent on a monthly income for the office space at Pune. So companies are recognized lease rent as a monthly income. So we need to find out how much lease income will be recognized for this particular para. So already we have done first 30,000 is for how many years? 4 years. So into 4. The first 4 years it is 1,20,000. 1,20,000 plus 33,000 for the next 4 years. It is 1,32,000 and then 36,300 for the next 2 years. It is 72,600. Total become how much? Plus 1,20,000 plus 1,32,000. It is coming 3,24,600 divided by 10. So this become 32,460. This will become the lease rent as what? They have given monthly lease office for a period of a monthly rent. So you can do multiply by 12 also. So of course, can I say this will be for 3 years. So this will be for 3 years now. So it is how many years they given? 10 years into 12 kar lo. Into 12 and divide by 12. Divide by 12 we will do. So what is the monthly income? Monthly income will be 32,460 only. So this is the answer, 32,460. 32,460 is the answer. I hope you have understood this point. Correct? Next point. How much interest will be capitalized for the construction of factory building during the year ended? Already we calculate the interest to be capitalized. How much we have calculated? 0.5775. So 0.5775 is nothing but 5,77,500. 0.5775 million is nothing but 5,77,500 in lakhs. Correct now. So option number B is correct. The employee benefit cost on account of stock option granted to employee to be recognized in the income statement for year 1. So stock option granted, already we calculate how much we calculated. We calculated 2,16,667 for year 1. So answer is what? Option number A is the correct option. Got this? So 1, 2, 3 was very easy. The employee benefit cost on account of SAR granted to employee to be recognized in the income statement for year 4. So read the question carefully. They have asked for year 4. So it means you need to calculate it. The first year how much? It is 400 into 75. The first year it will be 400 into 75. into 75. Means they have asked for the fourth year. Now, so you can do shortcut. Correct now. For the third year, it will be how much? 400 into 75 into 430. Into 430. Correct. So this will be the for how many year? Entire year based on third year. And for the third year, what will be your cumulative expense? Cumulative expense will be 3 by 4. So it will be 400 into 75 into 430 into 3 divided by 4. 3 divided by 4. It is coming how much? 96 lakh 75,000. 96 lakh 75,000. Correct. This for cumulative expense for 3 years. Now for the fourth year, what is the cumulative expense for 4 years? It is 436. 436 to 400 into 75 into 436 into 4 by 4 is equal to how much? 400 into 75 into 436. It is coming how much? 1 crore 30 lakh 80,000. Correct. So what is the expense of year 4? It is minus 96 75,000. It is coming how much? 34 lakh 5,000. So answer is what? 34 lakh 5,000. Option number C is correct. Option number C is correct. So you are not supposed to do year 1, year 2, year 3, year 4. Find out year 3 cumulative expense, then find out year 4 cumulative expense. The difference will be the expense of year 4. Chalega. Now initial cost of investment property taken on lease shall be recorded. Means ROE asset which has been classified as investment property. Already we have done 11 lakh plus present value was 7 lakh 60,000. That is nothing but 18 lakh 60,000. This is the correct option. So all answer we have done. Let's see the option given. So point number 1, option number B, correctly calculated. Point number 2, option number B, correctly calculated. 5,77,500. That only we have done. Point number 3, option number A, correctly calculated. Point number 4, option number C, correctly calculated. Point number 5, option number C, correctly calculated. Done. Simple. Done. Okay, sir. This also we have done. So your case study number 7 is also completed. Next video will meet in the case study number 8. Till then, bye bye. Enjoy your day. Bye bye.